Good day to you all. Sam here with you on a Wednesday, July 18th. And today, so we're looking at crypto today on a Wednesday. And on Wednesdays, we poll our Twitter followers, let them help us pick what we're going to review in video. So we have two winners today. So one of them being EOS to the US dollar, the other being Bitcoin. So I will be posting twice today. We're going to do EOS first, and then we'll get to Bitcoin. So I have EOS to the dollar here. Now this is on Binance. So we can see where we've been. Now some interesting things here with EOS. Now one thing to note is that EOS, unlike Bitcoin and most of crypto that peaked in January of this year, 2018, you can see that's where we had this peak before we started this correction. But then we had this other big, beautiful impulse wave here, and it ultimately peaked at the end of April. So different timeline here for EOS to the dollar. Now, a couple things to consider here. So we're looking at its full history here on Binance. Now, I wouldn't necessarily approach this and think, oh, 1, 2, 3, some sort of deep, I mean, suppose we could come back and eventually call this a diagonal. But I don't think that really is what we need to concern ourselves with as we look over to the hard right edge of the market. Now, there are some things that we can learn from looking at this. But what I'm just seeing here is impulse correction, impulse correction. Now, could we be starting another impulse? We certainly could. Now, as always, when we're looking at an asset, first thing is it technical? Are the algos in? Can we find their footprints? Well, there's pretty good evidence here, and just a few to just to show you here. So this was one that was, I think I'd shown this last year or earlier this year when we were reviewing this and looking at this correction. So you can see from this 2 to this 3 down here, we come just a couple of ticks shy of the 50 here for our wave 4, and then we end up coming down here to the algo target to the tick, and that's what you call a reaction. So, it's got to be frustrating for people that don't know to look for that, right? So there it is, clear as a bell. No question who's behind that, or, well, I shouldn't phrase it that way. I have no idea who the group of traders are that are behind that, but I can tell you without any hesitation that that's an algo that traded that. So this is the sell into the target. The target is taken, and then I suppose you could just continue to delude yourself and say, it's just a coincidence. Just a coincidence. Okay. If you want to keep thinking that, I will be happy to be on the other side of your trades. Okay, so as we go here, now we come into this 5-wave sequence here, and we get, it looks like 1, 2, and then we've got 1, 2, 3, 4, 5 to give us our 3. Not quite as clean on the way up here, but we do get here, we get a shallow 4 here at the 23 and actually get second target. So blows, just rips right through first target. We get second target. Now, I wouldn't be thinking of this as a 1, 2. I don't think that helps us. What do we have here? We have an impulsive wave and I have a correction, but we've come so far down. I'm not trying to think. I'm not going to measure this as a 1, 2 projecting up for a 1, 6, 1, 8. Now, that doesn't mean it couldn't happen, and I certainly could change my mind if this just starts to take off here. So question becomes, do I have a good pivot down here? Do we have enough here, enough evidence to suggest that this could be a hard low, and this is now the start of a trend change? Well, first thing we got to do, we got to get through this pivot up here, which we've come pretty close. I mean, so we could, well, I guess we'll call this a double top here, right? So we tapped at it twice here into this wave 4, came down one more last time, and now we've just, well, if I just wick it off, you can see this resistance here. So right here, we've just now tapped that, and we're rejected. So we got to get through that so that we can get a process here of at least a higher high relative to this, right? We've had a series here of lower lows, lower low, lower low, lower low. And now I'm sitting here on a 3-hour chart. Now we'll dig in a little bit here, but we need to get beyond this pivot here to give more confidence to this as being a good impulse. And there's a few things we can do here to help build this case. So just looking at it, right? So so first thought is, well, let's look for a relationship between the A, B, and the C. So if we end up having this correctly identified, and this is our A wave, well, we're certainly going to look for a relationship between the length of the A projected from the B. So for a B wave, that's unusually shallow. Implication is we've got a weak market. So for the B wave to only make the 38, well, surprising. I mean, it's a very weak market here. So typically you'd look for anywhere from the 50 to the 786, but there it is. It's clean 5 down. There's my ABC into my third. So it's hard to count that as anything else other than as a B wave. It's just textbook, right? So well, I shouldn't say it that way. The subdivision here is textbook. The lack of the depth or how far we retrace relative to the A wave is not textbook. So let me rephrase that. So here we come. Well, yeah, there it is, right? So and then we come down at 5. So we have to just allow for this. It's low percentage. We're in the 10 to 12% range for a wave B to be that shallow. Yet there it is. So here's our A. Here's our B. Front run, maybe. Weak market. It's hard to call it, but here we come right down, so they get target again. So then you might think, well, wait a minute, maybe they're using one of these other pivots. Well, that's right to the 618, but then we're getting through target. So it's a bit of a, it's hard to say, right? There it is, right to the golden zone here if we're working off of the 2. But that now we're kind of squeezing, thinking, okay, well, maybe an algo just used a substantial pivot. We get this little shelf here, which you can see. So we get this little shelf here where we just can't get through it. So significant pivot. Down we go. Here's our first significant low. We come golden zone. We fall short here. Now we're through, but now that leaves us in no man's land. So it makes me a little bit... they certainly could have used that, right? The fact that we go right to golden zone wouldn't surprise me. But look how well this subdivide's coming down. Now, this is actually a good example for people that are still kind of wrestle with the idea of the difference between a diagonal and an impulsive wave. So they're both motive waves. But the distinction being the internal way that we count it, and then the overlap of the 4 to the 1. So we have to be clear about where we're looking for these. So as this is currently counted, I have it as a diagonal. So we have an ending diagonal here in the C wave where we can allow for it. It's very commonly found. Now we can find an ending diagonal in the 5th wave or the C wave. Well, here assuming I've got this correct, which, again, it's kind of hard to count it any other way. I've got my 1. I've got an ABC into my 2. I've got my impulsive 3. I've got my ABC into my 4, and I got to push down to my 5. So I've got a clean 5 coming here. So, I mean, I suppose you could make a case that this was 1, 2, and we were going to just continue to go down. I don't think that's likely what's happening here. If we go swing low to swing high, we just have an internal retracement. Now, it's deep, very deep right here. You can see I've got an alarm on this. Should we break that? I want to know about it. But as we're pivoting here and looks like making some effort to get a trend change underway, and it's certainly far from being confirmed, but we have good signs here. If we come down here, and then now let me go to, maybe this will be easier to see on a 1 hour. So let me go down to that. So here's our pivot. All right, so here's our B wave right here. So let me clean this up a little bit. Now we come in a diagonal, in this case an ending diagonal. Well, the way we're counting this now, the way I have it labeled, this becomes my 1 wave here, right? So we have this, so let's wick that off. So if I pull this over here, so there's my 1 wave, and I'm counting it via the ABC. So in a diagonal, we're not looking for 5s, we're looking for 3s. So we've got an ABC. Now we can look for 5 coming down here in our C wave, and we've got a good 3. We've got subdivision here. A little bit of could be A, B, C, could be it's likely A, B, C, and we've gone up here for this B. And then we come down here for C, giving us our 1 wave. Well, if we look here from our pivot up here, if that's a 1, well, that's an awfully long 1. Well, look here. So this, just as we saw the B wave was very shallow, here we see the 2 wave also only making the 38 here. Much like the B wave, just got it almost identical in terms of how far it went through, goes into the Vegas wave, and then we get our rip down. So from this 38, if that's a 2, again, it's low percentage. We know that 10 to 12% of wave 2s will only retrace to the 38, yet 10 to 12% of the time, there it is. So we get our 2 here, now we come down. So I've got a good candidate here for a 3rd as we come. Is this a front run, algos? It's hard to say. But here's my 23. We've gotten 2 and through it. So I've got a candidate here for, let me squeeze this up here a little bit. So I've got an ABC for a 1. I've got an ABC into my 2. Then it looks like I get another AB ripped down here. It looks exactly like this one. 3-wave structure. ABC, ABC, down we come. Giving me a candidate for a 3rd wave. Well, at first glance, you look at that and you think, oh, wait a minute, man, that looks to me like that first wave is longer than the 3rd wave. I thought the 3rd wave had to be the longest. Well, here, if we measure it, we can see here, get that right on there. So we haven't made 100% the length of the 1. But remember, just as I've mentioned many times, whether we're looking at an impulse or a diagonal, the 3rd wave does not have to be the longest. It most often is. It just can't be the shortest. So if we take that same measurement here and we look at here our length of our 3rd and we compare it to our 5th, so I would do the same thing. I'm going to take the length of my 3rd right here. I'm going to project it from my 4th. Here would be 100% the length of the 3rd. So my 5 wave here, if I have this labeled correctly, and this is our 5, giving us an ABC down here, this completes my C, giving me in green here a 1, 2, 3 ABC into my 4. There, well, we can go up a degree here. Maybe that'd be easier to see. All right, so there's my 1, 2, 3 here overlapping the 1, thus confirming the diagonal. And then we finish with an ABC down here. And interestingly, within a couple ticks of the 618, commonly found in a diagonal. The other thing we'd look for is any type of relationship between the start of the 1 through the 3rd coming up to the 4. Well, it's a little shallow here. Ideally, you'd be looking for more volatility in this. So this is a common pivot for the 4th in a diagonal, but in this case, as we've seen along the ride here, very weak market. So we're getting shallow retracements. Here we just make the 23. We do get the overlap of the 1, but can't even make the 38 before we roll over. So the extension in the 1, like the culprit there. So looking here, you know, it's even if I do the same thing here, if I take my 2 and just measure it like I would an impulsive wave count, I do get this little double pivot right here at the 50, which is, like, remember, an algo does not care about an Elliott count. Just taking swings. Swing high, swing low. We go to the 50. Now they've been denied down here. So this is an unrealized target. Again, as I will often tell you, just because a target is there doesn't mean it must be realized. So this is a sign of strength. All right, so a failure to make the target, a sign of strength. So I have all of the ingredients that I'd be looking for here to tell me that I've got at least the pattern implied to give me a good hard pivot. Now, let me pull back out here just real quick. So if we look here now, I do get an ABC here. And as I recall, this was technical. So if I take the length of my A projected from my B, we get, well, so here we get just past the 200 with this little wick here. I don't have anything relative to this pivot here, as I recall. Well, we get golden zone. Now let's blow that up so we do get it. So you can see it. So here, let me get this dialed in right on it. So there's my pivot high. There's my pivot low for my A wave. All right, so what do we do here? Here's the B wave. Interesting. So that prior pivot here, right, look how that lines up with the golden zone. Where do we go? Right to the 618, to the tick. Now, here's the first reaction on that degree. So you can see it. It's very clear, right? So here's the first reaction. From the 618, boom, we get this little reaction. Keeps going. Second, third, we're all the way to the negative 1618, which is an absolute extreme relative to an algo pull. Now, I cannot tell you if algos stayed short. Certainly looks that way. And they could be trading this on a smaller degree. So there could be similar parties working with the same algorithmic structure, working this on multiple degrees. And if I dig in here, I could probably find 4 more. But from our perspective, where we like to stay on the 60-minute and higher, all I can see is A, perfect. So I get an ABC into my B wave right to the 618. Can't get any better than that. And then rip all through every target and come just shy of the negative 618. So technical, certainly algos are in this market. We don't have to wonder about that. So if this pivot is solid, and I've got one other thing that I will show you here. So working up now, go, okay, maybe I do have a low. So I can look here, come here. I can look here and say, okay, looks like I might, maybe that's some sort of 1, 2. Looks like I might have a 3, 4, and went up for a 5. Let's get that. We'll go to white. We'll go down. It's a submicro. See, maybe that's just getting started. Well, it's not the prettiest looking one, right? But I can make a case here. I've got a pretty good 1, 2, 3, 4, 5 into my third. So I can check here, just see if I've got anything teeing me up. There's my third. Well, this would be very shallow, right? Strong market. So we're seeing these extremes. The strength of the market is being reflected in the shallowness or the lack of depth of retracements. So here, not uncommon for a fourth to just come down, do a little ABC right to the 23. This is the strength of the market if we're only going to do a 23.6 here, and then we just blow right through the first target, and we get second target and actually have wicked through. So it has the potential here to be, so thus a motive wave, and in this case, an impulse. So we would want to, as we can't be absolutely certain about this count. This may, if we keep going, we may have to relabel this, but we have a contender here for a one wave to be in. So if I take my low here and I think, okay, I've got a good clean 5. Where'd you go here? Did I get, there we go. 2, 3, 4, 5. Let's go. Oh, we'll go to green. Let's go up a degree. So it makes sense. All right, we'll go to the green here. So I've got a candidate here for a one wave. So what are we looking for? Of course, as I've shown, I don't countless times here, we're just looking for 3 waves to come down and give us our B, or pardon me, our 2 wave. So if I think, okay, I've got a candidate here for a completed 1 wave. So up I go. Where are we looking for? Well, it wouldn't be uncommon to see a retrace back to this congestion area where this 4 is, which would put us here at the 50. We know the buy zone is between the 50 and the 618. That's our high probability zone for a wave 2. That's where we want to find it. All right, so reasonable count. Can't confirm it yet. Would like to see this come down in 3. I don't know what this is going to look like. For all I know, that's the A. Can't tell yet. But I know that I'm looking for the next opportunity here at the 50, and I've got some pretty significant upside if this is going to play. If we're going to get an Elliott count out of this, and we're going to get our third here, get this up here, we know that's going to be a good rough estimate for the target. So if we can come down here and get this, let's just do a little risk-reward analysis. That's the wave 3 target that we're after. We can put a stop under the 65. That's 8.6 to 1. Not bad. Not bad. Now, again, we're not prepared to call this top in yet. We don't know that that's topped here, but it's a candidate, right? So we could, and if we can get this 3-wave subdivision. So what we're looking for is this combination here. So we have pattern here. Now we're looking for pattern in conjunction with a Fibonacci retracement that has high probability. Where do we usually find a 2? We don't have to wonder about it. We know what the statistical data tells us. So we know that the highest probability for a 2 is going to be sitting down here between the 50 and the 618. So I would not be a buyer here, even though this thing could rip straight from here. There is no telling how far that could go. We could go straight here. We're putting the 1 wave way up here. All I know is right now I've got a candidate. Maybe. Right? Do I want to see this come down? Not necessarily. But at some point, if we start to come down, that's creating an opportunity. So I get here a combination. I'm looking for confluence. First thing, do I have an algo swing that makes sense? Can I identify what the algos have been doing? What did they do last? Do I have a pattern here that's prone to repeating? Or do I have a high probability zone? I have a very clear spot where I'm going to be out of the market. Guys, that's all you get. I mean, you can scour through fundamental data. You can go back and read and reread the white paper. But if you're looking to make money as a technical trader, that's as good as you're going to get. That's it. If that's not good enough for you, this is the wrong pursuit for you. That's all you get. No certainty. No, I know where the market's going. None of that. all you get is probabilities, and the confidence that comes from these patterns repeating millions and millions of times. We are in a position to be able to analyze that data, and we can draw some probability relationships and scenarios, and that's all we get. So if we come down here and we can combine a fib relationship, a likely algo participation point, the pattern, the Elliott count. Now, what else could we put on that? So it's constantly a process of looking for confluence. Is there anything else that might be there? Well, I don't have market profile on here. I could probably get that on just to see. Let's go with visible range. I don't know why I didn't have it on there. Excuse me. So here's my point of control. Let's see. Let's open this up. All right, so I have point of control sitting as a front run on the 50. One more thing I can put in terms of building that case as a potential entry point. So we know we have market acceptance here. Now, I happen to spot this as well. Excuse me. I'm going to go back here. I think I was on a 3-hour. Pitchforks will shock you how often you can find relationships that you hadn't thought of, or potential geometry that you might not have considered. So let me clean this up a little bit. All right, so there's our potential count. We can take some of that off. So we're back to confirming this pivot. I did happen to notice this because I'll check from every major pivot I can consider. I'll look at those. So looking here, make it right on there. You got to get right on it. I think I've got it right there. Okay, so take note here. So we come from here to the tick, retrace, to the tick, retrace. Now we're hitting it, hovering around it, one more time, hover around it. Now we're getting a reaction. Now, so you could certainly make the case that we have a corner pocket here, right? Boom, to the tick. Coincidence? I'll let you draw your own conclusion there. I would tell you there are no coincidences in the market. So that is significant. So we 1, 2, 3. Now, if we're going to move off of it here, as we know from trading principle number 3, that often if we're not going to pivot on the median line, as we did 1, 2, got through here, we'll hover around it as the market tries to figure out where it's going next. Who's going to win is really what I'm saying, bulls or bears. So looking at this and how nicely that geometry has held the market, that really gives me more confidence here that this is definitely something worth considering. Now, so you got to understand, there's a difference between a trade that's setting up and certainty. Could I be wrong? Of course I could be wrong. Everybody, and I don't care who you are, every trader, I've never met a trader who's right more than he's wrong. Not one. And I've been doing this for a very, very long time and met and worked with a whole lot of traders. It is just part of the whole program. If you can't accept that, you guys, then you got to rethink whether or not this is where you should be putting your attention. So trying to be perfect, or even just trying to win 60, 70, you don't. First thing, you don't need to. You don't need to. With good money management, that shouldn't be an issue. The cliched analogy is baseball, right? You get up to bat, you hit 3 out of 10, you're going to the Hall of Fame. With good money management in trading, 3 out of 10, you're going to have a very good year, unless you're doing stupid things like moving stops or not having a stop. 3 out of 10 with good money management and the discipline that comes from letting a trade run for you, 3 out of 10 should be just fine. Now, if you can do better than that, all the better. Then you're having a great year. But you can certainly have a good year with 3 out of 10. So with all of that established here, what does that tell me? That this is a reasonable zone here to be looking for entry. If we're stopped out, so you're stopped out. Okay, as long as you were intelligent about it. So here our buy was right here. We had a target up here for the 3. As long as you're not doing something like I know it's going to go. Oh, I'm sure. I know there was just that news. I know it's what do we got there? There's 1 to 1. Right? That's how you end up having a bad year. right? But if you're disciplined about where that stop is, even there, that's more than I would take. I wouldn't give it that much room. For, when we teed it up, what did we have? 8-1. You just don't need to do it, right? So because that way you're not freaked out when you get stopped out. It's just okay. It's just doing, cost of doing business, right? There are some costs in doing business. Getting stopped out is one of those costs. So you got to just accept it. You almost embrace it. Like, oh, okay, great. Well, good boy. My stop did its job there. I'm glad I'm out. I wouldn't want to be riding this down, because I'm sure eventually EOS is going to go. I'm sure of it. I'm sure of it. I'm sure of it. I'm sure your account is going to be in trouble if you start doing that. Place the stop. Don't touch it. If you're touching it, it should only be to reduce the risk or move to break even. All right, then you sleep better. All right, guys, just a reminder, give us a follow on Twitter. That's how we're choosing these coins here throughout the course of the week. We really try to engage with you. Also, a reminder, you can access our public Discord if you just kind of want to get a feel for what we're all about and what it's like to be on the Discord and interact with some of our trading coaches. That's a good vehicle for it. And we also have this giveaway that we're doing that you can enter if you'll read the description underneath, the link will be there. It's simple. You just put in your email address, and if you tweet it, like it, share it, every time you do one of those things, you'll get an additional entry. The pick is random, so the more entries you have, higher your odds. So there you go. And you can learn more about that, again, through the link under this video. You can always give us a visit on our website at tradedevils.com. And don't forget to give us a follow over on Twitter. All right, guys, I'll be back to you shortly with an update on Bitcoin.